what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year.
What's up, everybody? Welcome to the morning show here on Stock Market TV. I'm in an especially good mood this morning, just because I get to talk to you people every single day, and I love that. But you don't want to hear from me. You want to hear from Steve. You want to hear from JC. Let's bring them on and start the show. Come on now. Where's my intro?
All right. What do you mean, you people? You want to talk to you people? Who is?
Yeah.
Who are you referring to?
I don't know. What does anyone mean when they say you people? I don't even know.
I believe you are referring to the intelligent traders and investors who spend their mornings with us digesting the information from the evening session to prepare for the upcoming day and week ahead.
Actually, I shouldn't have said you people. What I meant was use guys. I
love
hanging out with use guys. That's it. That's
the gobble goal.
Who won the game last night? I fell asleep.
Which game? The Heat?
No.
He beat the Bulls.
Football game.
The old Taylor Swift Bowl or whatever. KC blew it. So that's good for the Dolphins. I'm stoked about that.
They did?
Yeah, they did. They did. How about that? Big win for the Eagles. Wow. Big win for market longs. It's really fascinating. Humans are a funny bunch, Spencer. Since you've been working with us, have you started to understand the human better, you think?
Does anybody understand humans?
You understand them better. You understand them better.
Sure. Yeah. But
a funny bunch.
What's prompting this, though?
Well, this morning, what prompted this is that so many people are just so surprised that stocks are doing well during a time that historically stocks do really well. It's kind of shocking, really. Like, what is everybody so surprised about? Stocks are historically do really well this time of year, and they're doing great. Like, I don't understand what everyone's so confused about.
I mean, the one constant for humans is human nature, and they approach markets with maybe not the right mindset since the beginning of time.
This is true. Listen, during different times of the year, we dress differently. We go to different places. We hang out with different people. And if you think that those behaviors don't impact the decisions that we're making in the market, then clearly you don't understand humans. And I would encourage you to go learn more about humans, because we do act differently and it does affect our investment behavior.
What's the best book about humans as it relates to markets?
That's a great question.
There's a lot of good ones.
There is a lot of good ones. I really like Investor Psychology Explained by a one Martin Pring.
Okay.
I think Sapiens, just to understand humans. It's not so much investing related, but understanding humans. Psychology of Money, not to give Morgan Housel more credit. I feel like we give him props every episode, but Psychology of Money is a good one. His new book, right? Things That Don't Change, or whatever his new book is called. I just finished reading it. It's great.
How about this one?
What's that Kahneman book?
This is a good one too.
Thinking
Fast and Slow.
Yeah.
Also the Annie Duke books. Thinking in Bets, excellent book. Her second book kind of takes that to a whole nother level, and it's deeper, it's bigger, and it's great. But I don't necessarily know that investors need to go take it that far, because now you're taking probabilities of outcomes, and it gets a little more complicated in her second book. But Thinking in Bets, just right off the bat, fantastic.
Charles Mackay in Extraordinary Popular Delusions chronicles the irrationality towards markets throughout human history. So if you like, studies of bubbles or just market stories, it's really one of the best ones, I think. Another notable is The Crowd. You ever heard of that one? A study of the popular mind.
Not heard of that.
Another good one is Bulls, Bears, and Dr. Freud. It's a good one.
Never heard of that.
Yeah, Bulls, Bears, and Dr. Freud. It was written in the 60s. It's old school.
To JC's point, though, about being surprised about why the market is doing well, do you think that some people are just naturally just take longer to mentally adjust to the current market? So these people, you could have said last year we were in a raging bull market.
Yeah,
we were.
Right?
And that's what causes the different stages of cycles.
Right.
People getting there late. That's part of the way you know it's close to ending, right, JC? When everybody gets there.
when your high school buddies are texting you about which cryptocurrencies to buy, the animal spirits have been made aware, right? There's signs. There are signs.
It's hard, right? Because think about just using this cycle as an example. After 2021, which was a bear market beneath the surface, 2022, which was a terrible, prolonged bear market, then all of a sudden the time to buy stocks came, summer into Q3. Everybody had been pounded in their brains for a year and a half how bad the market is. They just got on board with stocks are bad when it was time to buy.
Right, exactly. Exactly.
They're just behind. It's like lagging economic data. And now it's like, it's time to buy. By the time they get there, it's gonna be like, maybe it's not so good anymore. It's just
Mark in the chat saying, whenever I hear that's a great question, I think, give me a few more seconds to think. That's exactly right. Because the question is, what's the best book about investing and psychology and humans? And that's a tough question. I don't think there is a best book. I think that there's a few that give you different perspectives. Some are more about investing. Some are not about investing at all. Some are about poker, but can be related to investing. Like, it's more about, weight of the evidence. Like, what is the best sentiment indicator? Like, there isn't one, right? You kind of really need to build a composite. And speaking of which, why don't we go ahead and do that, Mr. Spencer? How about that for a segue? All right, let's start out with slide 3, because sentiment is really powerful. Because no, that is slide 2, slide 3, please. Thank you. So I think that earnings do not drive stock prices. The economy does not drive stock prices. Do you know what drives stock prices?
supply and demand.
Positioning, baby. How are they positioned? Because when they get you positioned in one way, you get an unwind in the other, right? Positioning. Did the fundamentals and the earnings and the economy change so dramatically over 3-4 months earlier this year? Or was it just that all these idiots came into the year incredibly short after the bear market, right? You know what I'm saying? Like, after the bear market, now they're the most short. Like, where have you been, dog? So the ripper at the beginning of the year was not because of earnings or the economy or the Biden or the Powell or, they were just incorrectly positioned. I don't know if you saw, but CPAs have bought more stock in the last 2 weeks than ever in history. But a few weeks ago, they were the most short ever in history. So it's not like anything has just dramatically changed over the last month. It's just that investors had it wrong at an extreme. So the unwinds can be very powerful, and we're seeing that.
I would give you that. I would give you a half point for that.
Half a point. They got those? Is that a Connecticut thing?
You get a half point instead of a full point, because you're right. Market mechanics can have a huge impact on price action, like you're saying, short squeezes.
Is there anything that has more of an impact?
Yes. They can't create sustained trends, the market mechanics. They could kick them off in a big way. They can
end them too.
They can end them, right? You see the exhaustion type moves. Yeah. Absolutely. But there needs to be something sustaining there, right? So fundamentals drive the supply and demand that drives prices. Yes, mechanics.
Agreed. I'll give you that one. I agree with that. I'll give you a third of a point for that. Yeah.
So my third of a point and your half point, we're almost at a full point.
Yeah, I believe that is what? Is that Too much math this early in the morning. Is that what, 6.5 tenths? What do we got? What do we got?
Fraction guy.
Yeah, I used to be a fraction guy. I'm more of like let me whip out my calculator guy.
So but short squeezes, same thing, right? They could kick something off, create a huge move, but don't think for a second that there weren't a bunch of lunatics from Reddit buying GameStop hand over fist, and that's what kept that thing going, right? Like,
Good.
Markets are weird.
And what makes you think they're lunatics?
I watched that movie.
By the way, Rachel, 1/3 plus 1/2 is not 5/6. I might not be a math major, but I'm pretty sure that's wrong. And you're not a math major either, aren't you? Like one of these shrink types, Rachel or me? Who's worse at math? Are you surprised that when you aggregate all of the sentiment,
it totally is 5/6? I just did it in my head, but go on.
I was gonna say I also just did that in my head.
I don't think that's right. No, 2/3 plus 1/2 is 5/6.
Move on.
It would be 4/6. It would be 2/3. No, okay, whatever. It doesn't matter. It doesn't matter. What matters is how surprised I am. Damn, Andrew Bell got it right. All right,
he got it.
Rachel. All right. I'm an idiot. What can I tell you?
Hey, right? Andrew, thanks for showing your work. We needed that.
Yeah, we needed that. It's too early in the morning. Thank you, Andrew. Much appreciated.
Because Rachel, based on old math class rules, would have gotten a half point too. Because Rachel, you did not show your work. You probably just copied it.
True. You would have gotten a half point. It's true. Okay. Anyway, can we talk about how surprising it is that when you aggregate all of the sentiment, AAII, advisories, active investment managers, volatility, all these things. Are you surprised that there's this much pessimism still in the midst of a raging bull market in the most bullish time of the year? Are you surprised that there's still this much pessimism? I am.
I tend to not get too surprised over sentiment stuff, but
come on. If I would have told you, don't look, where's sentiment right now? You would have said probably somewhere in the middle, maybe a little too optimistic, right?
I wouldn't have guessed here. Right. This is in the opportunity zone,
right,
as we call it. Right. I wouldn't have guessed here. I would have guessed somewhere in the middle.
Right.
But
somewhere in the middle or a little too optimistic, but just not here.
Look, as a bull, I like this. Right.
Of course.
You got a really nice reset. And that can add some fuel to the next leg higher. I mean, it already is. We're seeing it.
Yeah, that's right. Because this data, tends to lag by a few days, a week or so, depending on the poll.
I'll bet after this run, JC, we're going on 3 really, really solid weeks here now. This is going to be in a very different place very soon.
Yeah, probably.
There's nothing like price to change sentiment. Is that what they say?
That is what they say. I am one of those who says that. And let's go throw up that seasonality chart back up. This is, like we said, the most bullish time of the year. Stocks are doing very well during a time that stocks historically do very well. I can't imagine why anybody would be surprised by this.
Another chart that, as a bull, I love to see.
And it's not like the market has to follow these seasonal trends and this is the way it has to be. No, this is just the way it normally is. When it's not, that's the signal. That's when I get interested, when the market ignores seasonal trends. The fact that the market is just doing what historically the market does is just turn the page, move right along. There's nothing to talk about here. This is just perfectly normal market behavior. No one should be surprised. If the market was getting the crap kicked out of it right now, and the market was really struggling in this environment, that's a heads up that something bigger is happening underneath the surface. But we're not getting that at all. We're just getting strong stocks, making new highs, breadth expansion, more participation, both domestically and globally during a time when that sort of stuff tends to happen. So, like I said, no big deal, right?
Things are looking up. Elliot Wave has a comment in the chat. Really depends on your time frame.
I thought that you were going to start counting waves. I'm like, excuse me?
We're not doing that. But he's talking about trading or position trading, something shorter term. For most people, the time to buy stocks was this time last year. Right? Longer time frame. Yeah.
Well, midterm election years are historically a great time to be buying stocks. So if you did that, then you were rewarded for that. I can't imagine why you wouldn't have been buying stocks last November. Is there any reason why you would not? I mean, we obviously were, but is there any reason why you wouldn't have been buying stocks last November?
Some charts did not look good this time last year.
Yeah, of course there's a reason. Come on.
charts.
What was the reason?
Because it's hard to buy things when they've been going down psychologically.
Yeah, but by November of last year, most things were already going up. Market bottomed in June last year. We're talking about November.
Well, I guess it depends what you mean by market, right?
It's a market of stocks, and the new 52-week lows list peaked in June of last year. So that was as bad as things got. And from there, things just got progressively better to the point where by November, if you still weren't buying stocks, it was only because you didn't take the time to count.
There were a lot of nice bases shaping up beneath the surface this time last year.
Yeah.
Would you remember? Remember me and Maria Bartiromo? Remember her face? She looked.
It's not that there weren't things. It's not that there weren't things to buy. I'm looking at the Netflix chart right now. We bought this at 250 when it gapped higher on earnings from this quarter last year, and that was 250 points ago. Like that base was there. There were a lot of solid bases already ready.
I got a couple of interesting charts. I want to show the small caps quickly. Where is it? Here it is. So I want to show the small caps. Throw up the new slide 4.
The new small caps. The new small cap index. We're making all these new indexes.
Are we making a new small cap index?
Hell no.
Hell no. We got enough small cap indexes. Former resistance turning into support. Again, not something that should be surprising, pretty standard, right? But here's what caught my attention. So take a look at small caps, right? Put this picture in your mind, right? Now go to the next chart, Spencer.
So the more times the level is tested, the stronger it gets.
The more important the level becomes.
Oh.
Not stronger, the more important, the more relevant.
They say the more likely it is to break, but small caps defying that logic over and over and over again since last year.
Buyers keep stepping up. But look at the resemblance between small caps and the old equally weighted retail ETF. Is that an interesting resemblance?
I like this. I like that you're going here. I was looking at this very chart this morning because it's.
Look at Spencer DJing going back and forth. I like that, Spencer. It's kind of like he's like scratching the record there. Go do it again. Do it again. That was sexy.
You really should know. You really should know that this is all Fonz. I'm not doing that.
Oh, all right. Sorry. I don't listen. I prefer not to give you credit, Spencer. I prefer to give Fonz credit anyway.
I'm happy to take credit for it, but I'm not doing anything right now. I mean, I am, but I'm not doing the
Nice
charge.
job, Fonz. Great job as always. Spencer, go back into your cave. Good job, Fonz. But yeah, isn't it interesting how the resemblance?
Yes. No, and there's something there for sure. Both laggards defending the lows. Big day for retailers today. I think this is going to be red here today. It looks like.
All right, I have a few charts. Who is our guest today? Actually, I didn't catch today's notes. Who's our guest?
Probably because I didn't announce it. Ian McMillan will be on.
Ian McMillan in the house.
Ian
All
McMillan.
right.
Yep.
We know him. We know Ian. Oh.
Does Ian McMillan have the best Twitter handle of everybody?
The Chart Life.
It's a good one. Strazza says no. Who's got the best Twitter handle?
Broseph Joseph.
There's a guy named Broseph Joseph.
Mm-hmm.
That's a pretty good one. That's pretty funny. I like how you just knew that right off the top of your head. Like,
it's my personal favorite. So yeah.
Got it. All right, fair. All right, I want to rip through a couple of charts because they look very similar. So let's start with number 11 here. So this is the sector that is most highly correlated with the S&P 500 of all of the S&P sectors. And does this look like a major top to you, or does this look like a multi-year consolidation within an ongoing uptrend that is likely to resolve higher?
This thing is gonna go. And I think the more important point here about industrials is that this group is so strong beneath the surface. There are just as many bullish chart patterns and setups coming out of industrials as tech. Like,
just look at this picture. Just look at it.
Strength.
Engrave it in your head, right? Engrave it in your head. Now go to the next one. Homies.
Same thing. could say the same thing about.
Oh, look at that DJing, Spencer. Not getting any credit for that. All going to the Fonz. Nice job, Fonz, as always.
Building products and materials.
Dude, these building product, these small cap building material stocks, like we talked about them last night on our conference call. If you are not an Also Charts Premium member and you did not check out yesterday's conference call, your life has gone horribly wrong. It was a great. I'm not gonna like toot my own horn, but I crushed it on last night's call. Crushed it. Like seriously. No?
I know.
Crushed it. Like sometimes I'm like, oh yeah, it went great. Oh, it was fine. Last night, whoo, fucking crushed it, bro. So if you weren't there, go watch the replay. I think I did a good job. You tell me if I sucked.
I'm gonna rewatch today. I couldn't watch last night.
Next chart. Second largest component of the S&P 500, largest component of the Dow Jones Industrial Average, which is the world's most important stock market index.
This one doesn't excite me as much. I can't say the same thing about these stocks off the surface.
It's just like the other ones.
Most of these stocks actually look terrible. It's very strange that this index has held up so well. There's a lot of weakness beneath this. Like they're either good or they're bad in healthcare.
Oh, are they good or are they bad? Oh, okay.
Like, there's not many that are like, They're either like, wow, stay away from this, like Medtronic or Illumina.
All right.
Like, ooh, that's great. I want more.
All right, wise guy. Next chart.
Now we're talking about some real stocks.
Oh, these are the real stocks. Got it.
This is the real stock market right here. I mean, if you're not having fun with tech these days, I don't know what you're doing.
Dude, your home country bias is oozing out of you right now. Like just like
oh my god,
gushing out of your ears.
Because the US has the best.
Watch this. Ready? Can I please have a Dunkin' Donuts? Woo! You see that? Look at that. Come on now. Come on now.
Hi, Morgan.
Dunkin' Donuts coffee brought over here. Look at that. That is service right there. That is service.
You're funny today.
Next chart.
That's great.
Are these important too, or do these not matter?
Same thing. Hottest stocks in the world right now.
All right. Now, DJ, can I get, can you scroll up and just go through these charts one more time? Scroll all the way up to industrials and scroll all the way back down. Are you noticing like a theme here? Are you noticing a theme?
Yeah. And you know what else I'm noticing? There's one that really doesn't fit.
Go, hold on. Go. Next chart. Next chart. Yeah. Come on. Give it to him. Ooh.
Healthcare doesn't fit your theme. Ooh. This doesn't quite fit your theme. The other ones are back at the upper bounds. So you're saying the crappier ones follow and get there. That's what you're saying. I know what you're saying. I hear you.
I'm not saying nothing. I'm just pointing to the data.
Do you want to count the new 52-week lows in healthcare?
No. What I do want to point out, our good friend Ari Wald. Why has Ari Wald not been a guest? Or he was a guest once? No, he was at the chart. Why hasn't Ari Wald been a guest?
Ari has not been on the show. I asked you to get him on the show once, and you said, yeah, I will. And then that was the last of that. So.
I know, but then I think that we and then Chart Summit came. Why don't you just email him, get him on the show? This is ridiculous. What kind of communist shit is this? You got to get Ari Wald on the show.
Okay.
What is this?
I asked you to do it. You said you would do it, and you never did it. So here we are.
I think we're just making excuses now. Got to get Ari Wald on the show. Ari Wald did a great study where he studied, breadth expansion going back to every bull market ever. And he noted a couple of good examples where you didn't truly get substantial breadth expansion until year 2 of the bull market. 1988 being one of them, just for example. So it's not unprecedented to get extreme breadth expansion, like 70% of stocks above their 200-day moving average, and New York Stock Exchange new highs. Like those extremes tend to happen in the first year, but they also happen pretty regularly in year 2. Just a heads up. So for those talking about the old equally weighted index not being able to keep up, that's not bearish. It's not bullish. It's not bearish either. It's just more of a sector rotation thing than anything else.
Yeah.
No
disagreement here.
I wanted to finish one more chart that I wanted to bring up. This is new slide 17. getting back to the equally weighted index, underperforming the cap weighted index. This is not a risk on, risk off indicator. This is just an indication of sector rotation. So in black up above, you have the equally weighted S&P 500 versus the market cap weighted S&P. So when people are like, oh, it's only 7 stocks going up, oh, those 7 stocks are very heavy in the market cap weighted index.
Is it
not so much in the equally?
Is it not just an indication of how hard it is to bet against the biggest and best tech stocks?
As it should. Is it hard to beat LeBron one-on-one? Yeah. It should be hard, right? You know what I'm saying? Like yeah, your best players are really good. Right? They've proven that. So anyway, but it's less about that and more about the fact that growth has been outperforming, right? Because look at that value versus growth ratio. Last year, the equally weighted S&P 500 was outperforming the cap weighted S&P because growth was underperforming. Value was outperforming, remember? And then this year has been different. And you can see it when you compare the S&Ps with the NASDAQ, when you compare the Dow with the NASDAQ. These ratios are going to move with value versus growth. And the equally weighted index versus cap is the same.
Value held up surprisingly well during the bear market. The stocks weren't going up, but they were very resilient. And energy did really well. Now that you're seeing a new kind of bull market cycle, tech's leading the way as it typically does, I think you want to see this line keep going down.
Industrials are really doing well in the back half of last year too.
Yeah, value stuff. Yep.
Yeah, for sure. So this is so I just wanted to remind everybody about this whole equally weighted index stuff. It's not a risk on, risk off indicator. When I was young and dumb, I used to think that it was.
Sorry.
Well, I was going to say, when I was younger, I used to think that this was like bearish because I actually never took the time to count. And then one day I started actually counting, and man, life has just been a lot easier ever since then.
We're not taking any more questions about crypto miners. We gave you guys everything that you wanted. Morgan, great question. Go watch yesterday's show. We beat this topic into the ground for now. I'm kind of done with it for a few weeks.
We beat into the ground in last night's call too.
Yeah, enough. So yes, go watch yesterday's show. Watch the guest segment around whenever.
Also, Morgan,
crypto report.
You may be interested in this report we just put out. Totally free, by the way. I just dropped a link in the chat for you. Free crypto report, basically summarizing all these guys' thoughts and ideas.
I had a thought. I had something. Now I lost it. God damn.
God.
Because of the crypto miner question.
Did it throw you off, Strazza?
We were gonna go somewhere. All right, forget it. Bring Ian on.
Can we? Let's just do a quick little morning rundown. So what we're looking at here is the Dow futures down 75 points, S&P futures down 13 handles, which is about 30 basis points. NASDAQ futures down 80 points, about 50 bips. 30-year bond futures are flat. Gold is up 1%. Silver is up 1%. Copper's flat. Oil down almost 1%. And the dollar inching slightly lower here with volatility flat. Yields are flat. Dollar's slightly lower here, and the old Bitcoin down about 450 points. Ethereum down 17 points, about 1% down each, roughly. And that is your morning rundown.
Holding up just fine, though.
Oh yeah. Shall we bring in Mr. McMillan?
Yep.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ian McMillan in the house.
Morning. Good morning.
How are y'all?
So we were just complimenting you for your Twitter handle, The Chart Life, but now I don't know. You might have to give it away. The Chart Life brings no charts to do a hit on the YouTube.
No, we're gonna riff this. So
hold on, I have a beef to pick with Ian. Looking for the tweet. You tweet a lot, so I can't find it. But I saw over the weekend you were talking about the biggest rivalry in college football being South Carolina against Clemson. Like anybody gives a shit about those teams. What are you talking about?
Game, and it is a big thing. It is a big thing.
Stop it, buddy. And do you want to defend yourself?
Yeah. I mean, down here, it's a big thing. Is it? I obviously I'm biased. But yeah,
you were just trolling. You didn't actually mean that.
To me personally, yes, it's the biggest.
Yeah, of
To-
course,
to
because
the
you're a
na-
cock.
Yeah, to the nation, clearly, more interesting
Most of the
rivalry.
country doesn't even know what state Clemson plays in.
That's not true.
Yes, it
Now-
is true.
Oh, you sound like an idiot. Stop.
I
Clemson?
sound like an idiot because most of the country doesn't know where Clemson is.
Clemson's a big deal. People know where it is. It's actually not just a school. It's the town that the school.
First of all, I know where it is. Clemson baseball. I mean, I feel like Ian is like, I don't want to hear more about Clemson, but Clemson baseball is historically like legit.
So is Ohio?
Yeah, South Carolina baseball is better.
Let's settle this though. What's the right answer? It's Ohio State, Michigan. That would be the right answer, right?
That's a good one. That's a good
Right.
one.
Auburn,
Texas,
Alabama.
Oklahoma. Auburn, Alabama, Texas, Oklahoma, Miami, Florida State.
Yeah, Miami, Florida State.
I was thinking one of the West Coast rivalries,
No.
but no.
No.
Stanford, Cal.
No.
I've been to a Stanford game, and I was tailgating, and there was a girl there reading a book.
Yeah.
I kid you not. I'm like, what planet am I? Like,
See,
it's
John
you
Elway.
never see that in the SEC.
got to be like SEC, but I
should
think
be
those are
SEC.
the biggest ones. But the ones we just mentioned, those are probably the biggest ones.
Army, Navy.
Yeah, I mean, more
never
so
done.
tradition. Are we going to go to
Yeah.
Williams College against Amherst? Are we going to do that? Lehigh, Lafayette. Like, are we really going to go there?
I think
Fordham,
the safe,
Columbia, big
it's Ohio
rivalry.
State,
though.
Michigan, or it's Auburn, Alabama.
Miami, Florida State, dude, is a big one.
Eh.
Texas, Oklahoma is a big one, dude. The Red
Yeah.
River Shootout.
UConn gave Texas the whooping last night.
Speaking of teams no one cares about. All right, Ian. So why do you think people are so surprised that stocks are doing well during a time of the year that stocks historically do very well?
That's a great question. Tough. I mean, we had a 3-month correction. I think the whole August through October really had a lot of people reconfirming their bear theses. And, you get below a 200-day and then things really start to get cooking. But, I mean, right back above the 200-day, got to get back involved. I do wonder how much of this is short covering. Maybe you guys have already covered this versus people chasing to get back in.
Probably both, right?
Yeah, I think it's definitely both. I mean, I had started trimming back into that neckline. Hindsight 2020, of course, I didn't trim as much as you want to, but felt good about the 3-month. Got below the 200-day. Little sketchy as far as our
Below
process
200-day
goes.
in what?
Below the 200-day is
No, but
I
in
mean,
what?
yeah,
What fell
pretty
below the 200-day?
S&P.
Got it.
Got to be in pretty solid protection mode. But knowing that if we get back above, I mean, you basically got like 2 days in our eyes to get fully allocated again.
How bearish were you starting to feel based on the price action? I don't think you really base your outlook on anything. In October, like just at the lows a few weeks ago, things are starting to.
Yeah, dude. I mean, it was sketchy. You had Russell break to new lows.
Did it though?
It more than flirted
For like 5 minutes?
for a day or two. Yeah.
Yeah.
I don't know, like how.
I think it was for a day or two, and then you had small. It was. I mean, I get why the.
But there were stocks.
The
There were
excitement
stocks
around it
acting
was high.
well already. There were stocks acting well already.
There were.
And by the way, the
And it's a
dollar.
mega cap thing, right? I mean, if Apple and we're tired of talking about this. We've all done this for 3 years now, talking about these stocks or whatever. But to your point, I mean, if your best players are going to continue to drop double doubles,
Right. Give them the ball.
For that situation to have gotten worse a few weeks ago, you would have needed to see the mega caps follow lower. And then
you would have needed to see
And Microsoft never did. That was a huge clue to me. And Microsoft's now looking like it should outperform Apple over the intermediate to long term. I would much rather own Microsoft at this point than Apple.
Can we talk about the dollar? You know, the dollar was weak throughout October, right? The dollar peaked in early October.
Yeah.
The emerging market currencies were ripping all of October. All you have to do is look at the Polish zloty, look at the Mexican peso. These things would be falling apart if the world was coming to an end. They were ripping throughout October.
The guys on the analyst team
follow through into the equities.
I'm sorry?
Do you think that we'll get some strength overseas?
I think it's evidence that we're not going to see a lot of weakness, or it's going to be tough to see a lot of weakness. How much strength we see in emerging markets is still to be seen. I'm looking at more as, you know, the dollar has been the only safe haven in town. It ain't bonds, certainly isn't gold, it isn't yen.
No.
It's only the dollar. So if the world's about to fall apart, but you're seeing dollar weakness underneath the surface in that environment, that does not add up to the world falling apart. Quite the opposite. You know, suggested buying stocks. What about from a sector perspective? You talk about technology, you talk about the mega caps. You know, how are you guys positioned now? Do you think about going into the end of the year? Are you thinking about Q1? Like, why don't you talk to me about who your customer is, what your time horizon is, and how you're thinking about that here?
So we are definitely not thinking about Q1. We're pretty anti, you know, that quarters and end of years is just a random snap of a chalk line that way too many people get caught up in. I get why they do it. But for us, it's totally, there's no difference between December 31st and January 2nd or January.
Well, let me rephrase the question. How many weeks or months are you thinking out?
Oh, see, so we use daily and weekly charts. You know, it's a tough question. Like, how long do people have asked me before, how long do you want to be in a trade? Well, I'd like to be in a trade
forever,
right? Like, that would be great. Like,
that would be great. Good for taxes. Good for that'd be fantastic. But that's not how life works.
No, but when we're in a trend, we're definitely not day traders. We want to be in things for multiple weeks. Like, we want to be in multi-week, multi-month. How many of them make it to the 9 to 12 month mark? You know, few and far between. But yeah, so I would say intermediate-ish term. Yeah, and I mean it's private wealth clients. So, you know, yeah, we're not day trading, we're not a hedge fund, we don't use derivatives. Just basically ETFs and individual stocks.
But if you're in and out of stuff that quickly, your tax guy must be pretty busy, huh?
So I mean, we have our own tax department. Yeah. Most of the clients already do their tax theirs. They're really
Strazza's thinking about, like, you know, the mind and the heart and the soul of the accounting, you know, department.
Yes,
right?
exactly.
You know, whenever Danny's breaking my balls, I'm like, listen, Danny, it's my job to make the money. It's your job to count the money. All right, go count the money.
We don't do K1, so you as an accountant would be happy about that. We stay away from K1s because it's a nightmare.
People hate them. You will lose clients by buying shit and delivering people K1s. Yeah.
Can you explain to me why? But like in a hedge fund, you got a K1.
Because all these weird deductions, it's not the same.
It's just really when they come out is just really not practical for getting your taxes done by April 15th.
You're not filing on time.
Super late.
100%. Some of them you'll get in October.
Okay, so then why don't you just file an extension like a normal person?
Because we don't want to fire an extension for all of our clients.
People want to.
You have to do it because you're doing your attorneys.
Yeah, a lot of our clients do their taxes with us as well. We have like a whole tax.
And it's a thing for most people. They want to file their taxes, get them out of the way,
get it be done with. Yeah, people hate it. They just want it to be done with.
Yeah, they don't want to hear you're on extension. No.
But that really only affects like MLPs for the most part.
Yeah, which look good right now. So like, it's like, what do you do? Because unlike these investment managers, like thank God BlackRock, KKR, they converted away from the K1s many years ago. These MLPs, some of them, they got these juicy yields. I want to buy them, but you can't do it without a K1. I don't know if there's any options.
I guess the ETF AMLP.
Isn't your dad your accountant? Tell him to just tell him to do his thing. Just invest in your K1, make the money, and then tell the old man to count it.
It's more than just the lateness. There's often surprises on the K1.
I guess.
Yeah.
But like to not make an investment because you're thinking about what counting the profits is going to look like a year later seems silly. No?
No. It's not. It's more than that. You don't even know what the profits are until you get the K1 from a tax perspective.
Yeah, and then you're trying to do that for 800 people.
Right. Well, I don't have to do it for 800 people. I have a guy in San Diego who does it for me.
There you go.
So I'm not thinking about him. It's his job is how I look at it.
You guys like energy? I don't really like energy in general here.
Energy hasn't even broken out yet.
Mess. Needs time, right? I mean, structurally, big rally off the COVID lows or 2020 lows, and then just kind of straight sideways for a few years.
What do you like, Mr. McMillan?
Things that are outperforming. All the stuff that, semis, FANGs, FNGS, good ETF. I caught the first spike in the uranium. Dave's back on it from this side after the pullback. I didn't get back in it this time, but uranium, that was a good trade earlier in the year. Yeah, I mean, tech, I'm just super overweight tech, to be honest. Maybe I'm calling the top right here. Maybe I'm ringing the bell. But I mean, it's breaking out to new highs, new relative highs. What do you want me to do other than
own it
and be overweight in it?
And what about industrials? Industrials aren't going to break out next?
You think on a relative basis?
Ooh.
I mean, on an absolute basis, you're pushing them against new highs. On a relative basis, they're down near last summer's lows.
Let's go back to semis, though. Ian, what does that mean to you about the broader market, the health of this rally, yada, yada, seeing the strength from semis? Does it mean anything?
Yeah, I mean, I think it's pretty bullish. They're a sector, are they, I feel like JC's mentioned the time, should semis be viewed as the new transports? And I think that there's a pretty decent argument to that, right? Because look at now. I mean, if you're on the, for the market to do good, transports have to do good. Well, I guess outside a couple trucking names,
they're critically important to the world economy, and we got a taste of what the world would look like.
Yeah, they're important.
Do you remember COVID when we had the supply chain issues and you couldn't get certain chips, couldn't get cars? Cars were like getting delayed in production and stuff because they couldn't get their chips. I couldn't do certain videos, remember, because there was like a certain NVIDIA chip that we needed that took 7 months to get. Like, the economy needs semis. The pro-cyclicality there, I think, tells you a lot about how the world economy and world markets are faring.
Is there? I mean, utilities haven't taken off on a relative basis. Staples haven't taken off. I mean, there's all the classic stuff. I think someone posted discretionary versus staples at new highs. I mean, all this stuff you kind of want to see. We got the dollar. Where's the dollar sitting this morning?
Lower every day.
Yeah, okay. So there's another tailwind, right? Or in this environment, it's a tailwind.
Dude, the dollar peaked October the 3rd, man.
Yeah,
the dollar's been getting the crap kicked out of it. What, you think stocks?
Well, I would say it was sideways for most of that month.
If you're looking at the dollar index, but if you're looking at the components of what makes up the United States dollar, emerging market currencies were ripping throughout October. It peaked on October the 3rd.
Yeah, euro looks pretty good.
By the way, the day that the dollar peaked on October the 3rd is the day that the new 52-week lows list also peaked.
I have seen you mention that, yeah.
I don't think that's a coincidence. By the way, when the dollar bottomed in June or in July, when the dollar bottomed, that same day, the new highs list peaked. Again,
there you go.
Not a coincidence, right?
No, I love it.
What about international? What are you thinking outside of America? Sounds like, Japan maybe?
Yeah, like that dollar hedge Japan was really HEWJ was a really good trade for a while. We weren't on it. I kind of just watched it go without me. Yeah, we'll see if Argentina's back. Don't need to get in the political side of it. Just saying from a price perspective.
Dude, come on, that guy's awesome.
Yeah,
that guy's great.
he is.
He's awesome.
China, we got to do something with China. I mean, for EM as a whole, India still, I think, looks pretty good. India's been holding up well this entire time.
India's like not an emerging market. Like it doesn't
trade
like an emerging market. Like it doesn't look like an emerging market. You know, I mean, it is like we know it is, but it doesn't act like it's like Notre Dame is like what we talk about. It's like its own. You know, it's in the ACC, but it's not. You know, right?
Yeah.
I don't know. I think you got to be careful with India.
Poland isn't Poland at near relative high.
Poland, the zloty, man. We talk about the zloty constantly around here. This thing.
You talk about the zloty. The analyst team, they drink every time JC says zloty, so that's why our analysts are.
Well, every day that the zloty's up, people are making money long, so I will continue to happily mention it on a daily basis.
Now, Ian, you mentioned the hedge Japan. Hedge Europe don't look bad either.
Dude, have you seen these European banks? These European banks look great.
Yeah, like didn't UBS hold up pretty well?
UBS breaking out of a decade-long base.
Yeah.
Breaking out of a decade-long base. I mean, a lot of and it's not just European banks, it's European financials in general. Chubb making new all-time highs. This is an $85 billion Swiss insurer. Look at Zurich Insurance Group, $70 billion. Look at Allianz making new highs. AXA making new highs.
Look at Deutsche Bank, not at zero.
Deutsche Bank not at zero. Very good point. Very good point. Well, there's some truth to that. Like, it's funny we laugh, but that's real.
Things. Speaking of charts that were getting pretty sketchy, there back in what was it, like 2020? Yeah.
Are there trading opportunities in some of these banks, Ian? I'm talking. Stick with the big guys. How are you guys approaching this space? People don't.
Yeah, I'm sure there are. See, we're buying a lot less individual stocks now because of the ETF.
Okay, so you would do
that's like now our individual stock sleeve in our models.
So the ETF you guys are running, what's the ticker symbol for the ETF?
ADPV.
ADPV. And it's only stocks. So what's the strategy here in ADPV?
25 stocks chosen from the Russell 1000. Highest momentum names. 25. Below the 200-day, five-day moving average, below 200-day moving average. Strategy will go to short-term T-bills.
33% industrials right now. Is that accurate?
Yeah, sounds right.
Wow. 33% industrials, 21% tech, 16% consumer discretionary, 0 communications. That's a little surprising, right?
Yeah, it is. But so here's the thing. It's not going to latch on to, this strategy will rarely ever latch on to stocks over, like when you get into the triple digits, when it comes down to like the formulas we use, just ATR and ROC, they're just, once you get into triple digits, your percent moves are not as big as stocks with lower share prices. So
why? Because it's price weighted?
Not price weighted. It's just measuring rate of change. And it's easier for a $20 stock to have a 5% move or a 10% or 15% move than a $250 stock. So when you're using those metrics, you're just going to naturally pick up on higher beta type of names.
So the lack of beta for the monster caps doesn't give the momentum needed to include them in the universe. Sometimes, yeah.
I mean, it depends on, Tesla's got 2.3 beta.
Well, I'm sure there's going to be
exceptions, but generally speaking, is what you're referring to, right? How have you found the ETF process? How's the money raising going? Any lessons that you've learned along the way that you'd like to share with our audience? Because we do have a lot of people who are maybe thinking about launching an ETF. Any words of wisdom?
I would say understand what it costs and then understand the compliance overhaul, and that building an ETF is like 10% coming up with whatever you want to do inside of it, and 90% legal and compliance after that.
Well, it's like sports, right? You know, if a football team plays 10 games, but they spend the whole year, so 10 games, that's 10 days. What's
all that.
Rachel is our in-house mathematician. What's 10 divided by 365, right? Almost nothing. So you spend very little of your time playing football and most of your time working out and doing other bullshit to get you ready for those 10 games, right? It's just life.
It is.
You know, that's a bummer to hear, though. You know.
Yeah, the compliance.
Makes
Now,
sense.
I mean, once you get your processes in place, and I mean, it's over. It's a little over a year old now, so we're a year into it. Shitty environment for trend following, or at least for our strategy. But
and why do you say that?
Just the underperformance. We got caught. We got caught in the regional banking thing, which hurt. Owned two great regional banks at the time. Had no problem owning them. Huntington and F&B. Love the charts. Had no problem with the strategy, picking them up. So, and this strategy, so this is not totally non-discretionary, has nothing to do with charts, which is weird as a technician, and it took a long time to get used to, of watching just a non-discretionary momentum strategy buy things, and as a pure technician being like, WTF, or are we doing this right here, right now? But it would be amazing what, you know, we keep going. So it's how a lot of those would work out. But definitely just an interesting flip of the mind that you got to become comfortable with. I mean, my whole career I've been discretionary. So to leave stock picking up to a computer, and this is not some sexy black box that we, you know, hired 4 quants to come in and build for us, but, you know, essentially leaving it up to a machine to pick stocks is interesting.
And what is the best way to purchase your ETF? Is it in the open market or directly through you guys? How's that work?
No, yeah, open market, your brokerage account. Be able to turn around. Actually, best large cap blend fund in all of America in June. So when momentum's can cook, when we can get markets going, the strategy does well.
So you were offensive player of the month in June.
Yeah.
How about that?
But still sitting at 3-9 on the season.
All right, fair. Ian McMillan, they're managing ADPV, Adaptive Select ETF. We have David Zarling here all the time as well. Ian McMillan and him work together. Big fans of your work. Keep it up. We're rooting for you, Ian.
Thank you, guys. Thank you so much for having me.
All right, adios. Ian McMillan in the house. The chart life.
Good stuff. We go way back with Mr. Ian.
We go way back with Mr. McMillan. Spencer has a hard time believing that this was a community before he arrived. You know, he's like
never said that, but all right.
Very, you know, I'm like, you know,
we used to work together every day in the early days of Chart Report. Ian was very much there with Patrick and I and some others. Yeah.
How about that, Spencer? What do you think about that, buddy?
His articles, actually, I saw one of his articles from Chart Report featured in, I think it was Inside or something the other day. Always puts a smile on my face.
How about that? Huh? How about that?
I like them apples. All right. I'm going to call today the unofficial last day of earnings season. Really, we've got a number of big ones.
And when's the next earnings season? Next week?
Nah, the banks are going to report like around January 10th, 11th, 12th, somewhere in that window, right? Yeah. So it'll be, you know, it's usually about a 6-week gap between. So we got some big retailers this morning. We got NVIDIA tonight. We had Zoom last night. So let's do a quick earnings roundup.
Do it.
Yeah.
You want to just start with the calendar, please, Fonz? Let's rock that bad boy up so we can just get a sense of lay of the land here. And I would like to start with, let's go back to last night. We'll just do Zoom quickly, and then we'll go to the other ones from this morning. Look, by any objective measure, Zoom's business is going in the right direction. Their earnings and their sales came in above estimates. Their guidance came in above estimates as well. Their number of
If their business is going so well, why is the stock at all-time lows?
well, I wasn't done yet. Okay.
Sure.
Yeah. So their number of high value enterprise customers is continuing to grow. Their number of customers that are paying $100,000 a year is growing. But the rub is that all of these things, while their churn is going down, which is great, but all these things, while they are going in the right direction, Zoom's story in the last year and a half or so, maybe 2 years, has been the growth while up is just slowing. It's flattening, right? All that growth.
Spencer,
What?
There's no growth left for this company. They've completely flatlined, and that's a problem at this early of a stage for a company like this.
So they're incrementally growing, but yes, all the growth that they would have had last quarter, this quarter, next quarter, the one after, was just pulled forward a couple of years, right? So
here's what happened. Let me put some numbers behind the context you just provided, right?
Okay.
Because you could easily sit back and say, wait, they're still growing a little bit and the chart looks this bad. Here's why. It's that the market's going to price in good times when you're growing at heaps and bounds, right? And if those good times don't come to fruition, they have to reprice you. So this has just been a major repricing. This company in its first year operating, 2016, $60 million in revenue. 2 years later, $330 million in revenue, 6x. By 2019, it doubled again. The next year, $600 million in revenue. Then the COVID boom. They went from $600 million total revenue to 2020, $2.6 billion. 2021, $4.1 billion. And now they flatlined 4.4, $4.5 billion. They're stuck here for a couple years now. They went from just 5xing, 10xing, doubling revenues to nothing. And the bottom line is pretty much dead here. You look at something like EBIT, they went from making $1 billion just a year ago to half of that this year.
So that's the bottom line. You can look at the headlines from last night, this morning, and see, that they came in above estimates across the board, and everything is up year over year and quarter over quarter. But if you go back 3 years and compare the growth rates, that's exactly right.
Think about it. When you're growing like that, you get 100x multiple, right? Mm-hmm. And then if you don't keep growing like that, you got to be repriced to maybe a 20x multiple. It's 80% lower, right?
Mm-hmm. So, I was using Zoom. Shoot, man, I was using Zoom like 2017 before it was cool to use Zoom.
Did you see what they did? So Zoom did an interesting thing, right? Because we're a bunch of pikers over here. I don't pay for Zoom Premium. I think JC does. I got like 50 minutes or something, 40 minutes on a meeting, and then they drop you, right?
Yeah.
And say pay. What we used to do is just grab another link, drop it in the chat, and everybody jumps into a new meeting. Now, they make you wait 10, 15 minutes. They must have figured out people were doing that, right? So when one meeting drops, they say you can't start another one for it's 10 or 20 minutes.
That's smart.
It totally kills that whole thing. So now we just use Hangouts or any one of the million other options, which is also the problem for Zoom, right? This to me is like a streaming business. There's so many other close or equal competitors out there. It's like you don't have to use Zoom. You could use any one of these things. They all work fine.
Who gives a shit? This is a zero. Who cares?
It's amazing though that
it's an all-time low. Who cares?
Such an epic rise and fall. This stock really is.
Yes, it happens all the time. Whatever. It's really a miracle. It's worth $18 billion. I'll take the under.
We can't get data for pets.com. So if anybody knows where we can get this data,
we don't have it.
Yeah, no.
Are you sure?
They changed their name to iPet Holdings. So check for both, but I was looking all day yesterday. We might have to reach out to some friends, Jason. I got some people in mind.
We can get it, but are you sure we don't have it? I'm pretty sure we have it.
I don't have it in Optima, and Optima does a pretty good job at having delisted tickers.
Is it PetSmart? No, it's a different company.
What would it be? So like a crazy OTC ticker,
based on my research, because I was 10 years old when this was happening, they changed their name from pets.com to iPet Holdings right before they went to having a Q at the end of their ticker symbol. So I would check for both of those. I'm not getting them. We don't have them in our data.
iPet insurance company?
Not insurance. No, iPet Holdings, and it's not the Japanese one. I got the same data as you. You don't have it.
All right. That's a little odd.
Is
All right,
Zoom
we'll get
still
it.
a verb though? Is Zoom still a verb? Not for me.
It is. It is. We're more of
Yeah.
a Google Meets kind of. We use Zoom for some things, but when we have meetings, we use Google Meets.
Cisco WebEx is the best. You got to work for like
What?
Cisco WebEx is so good.
No, it isn't.
You could tell Strazza had a corporate life before.
You ever used it, and where?
Yes, it's awful.
I think I used it like 20 years ago.
Where did you use it, Spencer? Because I know Benzinga ain't paying for that.
No, I used it in meetings at places like Fidelity. They use it.
That sounds right.
It's not awful. I used it for a very long time.
Is this the
All right.
Citrix? The Citrix? Is that what that is?
Yes.
Cisco. No,
I know, but is it like the
No,
Citrix?
yes,
No,
yes, it is.
Security thing.
That's different. Oh,
Citrix
all
is a
right.
security thing.
Whatever.
Yes, and,
right,
and
well,
a browser sharing.
You see how Strazza's voice changes when he starts talking about corporate life? You know.
All right. Speaking of businesses in decline, let's go to Best Buy here this morning. Yeah, not great, Bob. Really here. I mean, the businesses they're closing stores left and right. They're closing They closed 10% of stores in the last year, I think. So even though some of their numbers actually came in above estimates, I mean, it's a business that continues to be in decline. They've talked about they lowered their own guidance for the year.
Who?
This is Best Buy.
Oh.
So they lowered their guidance for the year. Consumer demand is uneven. Yeah, we know that. There's no big like iPhone cycle this year, and that drives a lot of their sales. So in the fourth quarter,
I gotta tell you, Best Buy's probably a zero, but I did have a great experience at Best Buy. I went once this summer. People were so nice, so helpful, in and out. Very impressed. I bought a speaker. It's great.
Likewise.
Speaking of these big box retailers, they're all different, right? We come on, we say nice things about things like places like TJ Maxx and Costco and Ross stores. Any of you guys watch the John Oliver show?
Not recently.
So watch this week's episode.
Was it on dollar stores?
Yeah.
All right, I'll have to check it out.
It's so true. I spent a little time in South Carolina, so I've been to some of these rural dollar stores. They show videos and it's quite the business model.
My daughter's favorite store is the dollar store.
Quite the business model. So,
well, look.
Did you know that you ever go to the dollar store and say, "How is this bar of soap so cheap? Like, how could they sell this for $1 when Publix sells it for $4?"
Sure.
They're smaller.
Ooh, that's a fun fact.
They're smaller. The manufacturers produce special dollar store sizes that you can barely tell the difference of.
Wow, that's a very fun fact there, Strazza. I have another fun fact. Best Buy is only $13 billion, so it's only $13 billion away from being at zero. It's a zero, right?
What, Best Buy?
Yeah. They've been saying that for a decade, though, and
right.
We are.
Who's they?
Dude, the fact that they're still here, we lost Circuit City like 20 years ago. People barely remember. But these
guys, Radio Shack. Radio Shack. Anytime you need like a random battery or like an obscure cable,
a cord. Basically, anytime you need the things that most people buy on Amazon, you would go to Radio Shack. But Best Buy clearly is doing something different or better to, just like Spencer said, to still be here at all. And the chart looks good. So
market zero, Smokey.
Speaking of good retail, let's look at Dick's Sporting Goods, DKS. Their report was very good. Sales and EPS beat and up year over year. They raised their full year guidance. Unlike Best Buy lowering their guidance, Dick's is raising their guidance here this morning. So stock is up on that headline, and chart looks. This is a wild chart,
Dick's
man.
Dick's again. Great experiences at Dick's. Experiences.
A lot of this is Golf Galaxy.
This is probably the store that I frequent the most. How about that for a fun fact?
A lot of this has to do with the secular bull market in golf. It's true.
The chat thinks that Spencer is a huge fan of Dick's.
And I am a huge fan of HBO.
Sure. Okay.
Let's look up some segment revenue. Yeah.
Let's see.
Do they own anything else, or is it just like the Sports Authority situation they got going on?
That's a good question. Okay, so
they own Golf Galaxy.
So what is that?
Golf warehouse, like the PGA store. You go there, you try clubs. They got all the bays that you could.
Just
swing
keep in
that.
mind, Strazza, that most of us don't pretend that we're good golfers, so you're gonna have to explain what that's like.
Can I?
No one knows what you're talking about.
Wait, hold on.
Golf
Remember,
galaxy, you see the stores, you know what it is.
I've never seen one. I have no idea what you're talking about.
It's a huge golf warehouse, basically.
Yeah, it's like
They don't have
Costco
them by
for
me.
golf.
Hold on. Remember over the summer, when they reported and they said they were having massive, I guess, shrinkage issues, right? Theft, right? And the stock got like shellacked. You can see it on the chart right there. Yeah. Okay. So you're telling me that in one quarter they figured it out? They figured out whatever the problem was?
No, but what you're alluding to is that was a bullshit excuse.
Of course it was.
Because everybody else was saying it, and it sounded
Yeah.
good, and maybe helped them get through a quarter.
Yeah.
Now it's back to business, right?
I don't know.
Trying to get segment revenue. I want to see how much the golf contributes. I'll have to look into it later. I'm gonna pull the 10K here.
All right. We'll keep going here. Let's look at Lowe's here. LOW, they reported. Let's get their numbers up on the screen here. It was interesting. Okay, so they reported actually a earnings and sales decrease. Well, no, it's what Home Depot said. Same exact thing Home Depot said. Earnings down, sales down, lowered guidance. Same exact thing as Home Depot. Same sentiment.
Yep.
Yeah.
I saw this. So the retailers today, Spencer, correct me if I'm wrong, everyone is reacting lower, I believe, except for Dick's.
That's pretty much it. Yep.
And so what does this XRT chart look like now?
Oh, and Burlington. Burlington is up.
But XRT is equally weighted, so one stock is not going to move this thing.
So what does this RTH look like then? Not much.
How big is Dix and RTH? It looks better than XRT, but
yeah.
How big is Dix and RTH?
I don't know, but it's probably solid weighting.
Not even in the top 10.
Really?
Not even in the top 10. RTH is 20% Amazon, 9% Walmart, 8% Home Depot, 8% Costco, 5% CVS.
I'll stop you right there. Before the CVS, that sounds like a great list. Just full of stocks that I want to own for the long term.
TJX is in it, 4.5%.
Boom.
O'Reilly Automotive, Lowe's, JD.com.
So this is why we sit here and always say the cap-weighted indexes are the better options for if you're looking to invest and make money rather than for information. Why? It's the best, simplest momentum strategy in the world. They're going to keep buying the good ones. And you're going to have a top 10 list like JC just read that's full of leaders. That's just how it works. It's the structure of the ETF. So difference between RTH and XRT.
All right, that's pretty much it. We had Kohl's. They suck. That's a zero as well eventually. It's down as well this morning. We had Burlington, which is up for some reason. A couple other random, Abercrombie and Fitch, super small. American Eagle, super small. They're all down.
Eagle down, but Abercrombie is absolutely crushing it.
Oh, really? I just assumed I saw American Eagle and I assumed Abercrombie was down with it. But
can we check Abercrombie earnings? I think they just came out too.
Yeah, Abercrombie beat estimate. Okay, adjusted EPS $1.83 versus $1.18. Sales 1.06 versus 1.34 billion.
Yeah.
Guidance net sales growth 12 to 14% versus a prior 10% estimate. So okay, I guess they're not going to zero today or anything, but the stock is down.
Down 7%.
Yeah. Anyway, then we had Baidu, and then of course the big one is tonight. Obviously, Nvidia. They are going to be the story of the day and the week and the month and the year.
The people who are telling you this week that you have to wait for Nvidia earnings to make any decisions on your portfolio and to buy any stocks are the same people that told you last week you got to wait for the Apple earnings call to get out of the way before you make any actions in your portfolio. And they're the same people that told you the week before you got to wait for the Fed and the new FOMC announcement to get out of the way before you. They're going to be waiting forever. Okay, these are perma bear people. It's just one earnings report, It's for one company.
I've been doing this for over 20 years. There's always something. It's the GDP, it's the inflation, it's the Powell, it's the Trump, it's the, the non-farm payrolls, the farm payrolls. Then you got this earnings is the most important earnings season of it, in human history.
Every earnings season is the most important earnings season in history.
Are you guys not paying attention? It's the same shit every week. Just ignore it all. Put some music on. Pour yourself a glass of wine.
NVIDIA is in such a special and unique spot at this point. And I get it. If any stocks do continue to trade on sympathy to NVIDIA, then the market's just missing it. And that's not going to last forever, right? Because these other stocks that say they have something to do with AI, nothing like what NVIDIA is doing with AI. It's its own situation. It shouldn't flow through to the broader space. I know it did, especially in earlier quarters this year, but I really think that ends. So I wouldn't overthink this report one bit.
Yeah.
It's going to be a monster beat. It's going to be a great report. Whether or not it'll be good enough for the street, we'll see.
What's the options market pricing in? Is Shawnee, baby? Shawnee, you still there?
I haven't looked. I can look right now for you if you'd like. But
the last report was a snoozer.
I'd rather just ask Sean.
The last report was a total snoozer. We were at the range highs, right where we are today, and kind of just stagnated there, still trading in the very same range. So I don't know. Maybe this is the report that breaks them out of the range. I think it would make sense, right? If you look at the best tech stocks right now, ones that have looked like NVIDIA, they're making new highs. So I don't see why NVIDIA wouldn't follow unless there's some sort of, negative surprise.
Okay, one other headline, and then we'll bring Patrick on. Anyone out here who owns VMware, Broadcom, that acquisition looks like it's going to go through conditional approval from China here this morning. So if you do own VMware shares, you have the choice to either receive $142.50 in cash or 0.252 shares of Broadcom for every share of VMware that you own.
What does this have to do with China?
Nothing. I'm just sort of rounding out the headlines that I saw this morning. So Broadcom VMware, that's going through. Expected to close tomorrow, and that's the end of that story. Okay, let's bring on Pat.
Yeah. Okay.
All right.
Fellas,
Howdy.
how we doing?
Oh, just trying to finish up earnings season.
Earnings season of your life.
The most important earnings season in human history, of course. Thanksgiving coming up this week, my favorite holiday of the year. I have a lot to be thankful for. We all do, all of us here on this show. We are very, very grateful for everything that we have, our friends, our families. We're all in good health. So let's eat too much and drink too much to celebrate that good health, right?
I agree, yeah. And I think it's my favorite holiday too. It's got a good message, not too religious. It's got all the fixings for a good holiday.
It's something for everybody, right? It doesn't matter if you're a Christian or a Jew or Buddhist. It don't matter, right? Are you thankful for what you got or are you not? And us, I can speak on behalf of our crew. We are all very, very, we have a lot.
I think if you ask most people, they would say their favorite holiday is either Thanksgiving or a lot of people probably say Christmas too, but Thanksgiving really is probably one of the most common answers you get for that question.
St. Patrick's Day is a good one. St. Patty's Day in New York City. Woo,
depends where you live, I guess, for that one.
It's true. Chicago, New York, Savannah.
Savannah. Oh man, I've been to that parade.
I'm a big 4th of July guy. Don't forget 4th of July.
The 4th is great.
Yeah, Cinco de Mayo, right? You know what I'm saying? The move in New York City is on Cinco de Mayo, you go to the Irish pubs, and on St. Patrick's Day, you go to the Mexican joints. That's the move.
New York City on St. Patrick's Day is the biggest shit show.
You're walking to work, and there's already people passed out on the sidewalk.
I've had
on your way to work.
Like stale beer.
I have worked on Madison Ave for St. Patrick's Day a number of times in my day, and it's a spectacle.
And then they're all coming in from Connecticut, getting drunk on the train, right?
Dude. Oh yeah, you can take a car to work that day. SantaCon is another disaster day for New York City. There's a lot of them.
I used to complain about SantaCon, and if you can't beat them, join them. That's what I ultimately came to that conclusion. Because you can't leave your house. You're gonna run into drunk Santa Clauses everywhere, so you might as well just be one.
It
took me too long. It took me too long to come to that conclusion. It took me too long because if you're wearing red, the taxi drivers won't pick you up. They'll just drive right past you because they don't want to deal with you.
Yeah,
and you're not even dressed like Santa Claus, but you kind of look like you're close enough. You're not coming.
Oh,
I was like, you know what? I remember being at a restaurant. This is like 15 years ago with my girlfriend. I'm sitting there and and we're just having a nice, quiet, romantic evening and candlelit dinner. Yeah. And then we're right by the window. And these drunk Santa Clauses are banging on the windows, like flicking us off. I'm like
peeing on the windows. So are we taking Friday off, guys?
Yes, Mark. No, who asked the question? Joe asked the question. Yeah, obviously no shows on Thursday, and we're gonna take Friday off as well.
I'm going to Jersey. I'm going to the stadium that the Jets rent from the Giants.
That's funny because I'm actually going to Pennsylvania.
What's going on there? There's a game on Friday?
Yeah, first time ever the NFL plays on Black Friday. Dolphins Jets.
Yep.
You're gonna put on a whooping is what we're gonna do.
I'm going to Miami and I'm gonna sit on my cell phone and buy things from the internet.
Yep.
That sounds really depressing.
Anyway, wait, let's talk. We have Patrick here. Let's talk about the chart. Okay, let's talk about the chart report, please. Chart report. I have it up here.
I got some part of that after this.
I'm kind of curious to hear what's on Strazza's shopping list, but yeah, let's do it.
I'll let
golf balls. Like he buys the golf balls that he's not good enough to hit, so that he hits them even worse.
I have a much longer list than Steve. I'm
sure. You get the Pro V1, Steve.
Yeah. I'm moving soon too, Spencer. So
he has no business buying some of these golf balls.
My friends make fun of me for buying Pro V1s.
Good. You need the opposite of Pro V1s.
Patrick, chart of the day. Thoughts?
So, I mean, pretty self-explanatory there. Here we are on track for, I think, the third best November ever. It's been an awesome start. We're up like 8%. VIX is near the lows of, near multi-year lows, not too far away. So it's been an awesome start to the month. But Ryan here pointing out that the best part of one of the better months comes in those last final days of November. So, you got to kind of imagine, it's hard to imagine that this could kind of keep up, but, history says that the better part is in front of us.
Did we pull forward the bullish November seasonals?
It's possible. But, for quote of the day the other day, we used a quote from Benjamin Graham, who I think he's kind of a closet technician. But
I say it all the time. In fact, one of his chapters in the book is all about technical analysis. People don't believe me.
Yeah, no, he was very much about like the whole behavioral side of things, which is just so funny because he's kind of like the godfather of fundamentals.
So if the godfather of fundamentals is a technician, maybe we should follow market behavior. You think?
Yeah. He had an awesome quote that said, in a bull market, imagination matters more than like fundamentals and things like that. And it's kind of a good point, like when momentum's hot like this, things can carry a lot further than a lot of people realize. You hear people saying, oh, it's up too much. It's up 14 of the past 16 days, things like that. But things could get crazier.
When they're rallying the altcoins like this, anything could happen.
Right.
Speaking of people's imagination,
Solana putting in the kind of candles that it is.
Dude, you got a $12 billion dog coin.
Finish the chart report because I got something for Patrick.
All right. What else jumped out to you, Pat? That, by the way, if you have not watched the latest episode of Trail Lines Over Headlines, I recommend you watch it. It's on YouTube. Go check it out. Scott Redler, he's the man.
Yeah, Scott was a great guest. So another thing that stood out to me, equal weight. Crossing above that 200-day moving average, you've heard so much about how bad equal weight is and how much it's lagging. It is lagging, but it's making progress. It's just a little slow. It's lagging. So that's step in the right direction for breadth and all that. And meanwhile, you're seeing a little bit of life come back to small caps. So breadth probably not as bad as a lot of people realize right now.
And the equal weight indexes are just an easy way to dispel that stupid rumor about the Magnificent Seven.
Yeah. You're still seeing those calculations, though. You know, if the S&P would be up this much if not for the Big Seven and things like that.
It's always that way. I thought Urban Carmel had a good visualization of it in the chart report the other day. Pat, have you ever considered banning anyone and everyone with a dark background in the chart report? Has that ever crossed your mind? Because it crosses my mind a lot.
Well, then you're going to get
I'd have to
a lot of the
good
a lot of the Bloomberg charts are black because they don't change them.
Yeah,
but they could change them.
They could. Yes.
And they choose not to. That is their choice. It's a choice that they make.
Yeah, public service announcement. I do like white backgrounds. I mean, I think it just stands out easier.
It's easier
the
on
black
the
looks
eyes.
Like
it's easier on the eyes. You know, remember like Victoria's Secret stopped bringing in beautiful women and they started bringing in like men and all kinds of not beautiful women, and the stock collapsed, and now they're like, oh, we're going to go back to beautiful women. It's kind of like that. You know, like, you know, bring in the beautiful charts if you want to get some recognition. If you bring ugly charts, no one's going to look at them.
I need a hot take button that I could just smash.
Why, you think it's a hot take? It's just common sense.
Good one, JC. I'm with you. All right, Pat, why is it that throw up the table, Fonz? Yeah. The Wingstop won't stop hiking their dividend. Who knew?
Really?
Who knew? Rick Ross's Wingstop, talking about fast food restaurant here, is actually a young aristocrat. Who knew?
Dude, the lemon pepper wings.
All-time highs. You were bullish on that thing in 2018, 2019.
Show me the chart.
Ooh. Lemon pepper. You guys not listening? Lemon pepper.
I think that's what they're known for, is that one flavor, I think. I don't know.
Is that what they're known for? I thought it was like this discovery I made. No?
No.
Really?
Oh. All right.
You wouldn't think that would be the flavor, though.
I don't hang out with people who eat at Wingstop, so
I also tried to avoid a Wingstop as well.
I don't know anybody who's ever been to a Wingstop, but I wanted to go because look at the chart. I got to see what all the hype is about.
You got it.
And lemon pepper wings were delicious.
This is what happens when you give your customers free desserts.
Give free dessert?
They gave me a free brownie, the lady, because she was sad that I was waiting so long. I wasn't even waiting that long.
Sad.
Talk about service.
That excellent service. And it's right next to the DMV, which is like super grimy, but it was clean inside. They were playing 90s hip hop.
I mean, I've never gotten a free apple pie from McDonald's.
That's right.
Not to get all fundamental, but there's like a very small group of restaurant stocks that always, for some reason, just trade at crazy high multiples compared to their peers. Wingstop, Shake Shack, used to be Domino's. I'm not sure anymore, but they're just crazy expensive.
Everybody is just hoping to be the next Chipotle.
Oh, Chipotle! That's the poster child. Yeah,
the model.
That's the poster child. Yeah. Oh yeah, sure. Anyway,
all right. I thought Pat would like this because he's bullish. So
I like this one. Yeah, bullish wing.
All right. You guys want the chart report? The link was on the screen. The link is in the chat as well, or description as well on YouTube. Get it. It's free. Goes out every single day. Time for recess. Yeah, I think probably. So okay. Where's my recess video?
Getting a lot of questions about wine pairings and Thanksgiving. I think that there should be no question. I mean, listen, you can drink whatever you want. I'm a classic guy. You know, I'm a traditionalist when it comes to Thanksgiving wine pairings. You go Berg all day long, Burgundy, red Burgundy all day long. You know, if you want to do, I've done before some Mendocino Pinot Noir. I've done that. That works too. But honestly, you know, Turkey Day, all the fixins, you know, you get a nice Burgundy Cru, maybe anywhere, any Côte de Nuit, get yourself a nice Côte de Beaune, anything from there, you're going to be good to go. Maybe start with a Chablis, just wet the beak a little, then you go for the Redberg. And then, but this year I'm taking it another level because my mother-in-law makes like a really meaty stuffing. It's like with sausage in it, and it's really, really good.
Yeah.
Pinot Noir is not going to be able to keep up with that. And I was telling her last night, and I'm like, we're just going to have to go with a Southern Rhone blend. You can go with like a Chateauneuf du Pape if you'd like. Classic. I'm gonna go with a Gigondas. That happens to be my favorite Rhone Cru, Gigondas. Something a little bigger to really keep up with that stuffing. But that's a personal issue that I have that not everybody has.
I have a personal issue with the Thanksgiving menu in general. For the first time in my life, I'm more or less not participating, and I don't think I'm gonna eat turkey this year for the first time ever, and I'm not gonna miss it. I'm so happy to not eat turkey. Talk about the most overrated menu.
Oh, no.
Does anybody like turkey? Does anybody?
I
actually
love
like
turkey. Why do you guys not like turkey?
Yeah.
Just because you suck at making it doesn't mean it's not good.
It's the driest, worst meat of all the meats. Like
If you make it dry, don't make it dry. Make it juicy and delicious.
Listen,
Turkey's,
I like
turkey's the worst bird.
tradition. I get it, but that's it. There's nothing past that. Like if you did like a blind tasting to somebody who knew nothing about like the tradition, like this is awful. I want a steak. Also, stuffing is like the nastiest fat boy food ever. What is that? And who came up with it? Like, what is stuffing? It's just bread and nasty stuff all mushed together, and they make it all.
Stuffing is like that. So my mother-in-law makes a very meaty stuffing, actually.
Go vegan.
Sure, your mother-in-law's stuffing is great.
It is really good. Sausage.
I have a really
like Italian sausage stuffing. It's fantastic.
Yeah.
I have a sad announcement to make. The green that you all.
Oh no!
The green, it's going. I've been harassed enough. It's going. So
Like Ninja Turtle ooze green.
I think it's Sherwin
Terrible.
Williams and
Green.
If you
It's like
love
a 1960s dentist office or some shit.
So I will miss it. JC won't. Most of you in the chat will also not miss it. But I think I'm sad to see it go.
I never hated the green, but
Thanks, Spencer.
Honestly, Strazza, for a 1%er, you look like you're in your mother's basement.
You're such a dick.
Why?
It's
It's
not
true.
that bad. It's a guest room that was transformed into an office. Tiny
Looks like you're
little-
home.
Hey,
You make way too much money to look like you're homeless.
the houses
Okay.
are small in the Florida Keys for a reason.
yeah,
Just saying.
he's in America's basement, the Keys.
America's basement.
That's good, Spencer. Yeah.
All right. We are done here. We're doing spaces at 11 o'clock, right? As
Yes, sir.
usual. On the chart report, we got chart request live at 1 o'clock today. It's JC and myself. And that's a wrap. So thanks to Ian McMillan. Thanks to Patrick for hanging out. Thanks to all of you. If you're watching on YouTube, if you'd be so kind, give me a like. I really appreciate that. It does help us in the eyes of YouTube. I don't know why, but it does. And we'll see you guys tomorrow. If not, later on today for the spaces and CRL. Go make some money, all right?
Turkey
Adios.
Spencer.
Thanks.
Run it. I can't take no loss. I don't